Hello everyone and welcome to the European Session Brief. We're on Monday the 17th of April 2023, 20 past 8 here in Europe. Hope everybody had a good weekend and ready for another busy week of markets. Big week for UK data with jobs, CPI, retail sales on deck, more on that in a second. Flash PMI is the main global release, a ton of central bank speakers in the mix. Along with ECB minutes and Fed beige book earnings season rolls on too as 60 of the S&P 500 reports. So in the UK inflation, British Prime Minister Rishi Sunak is expected to receive a boost this week as inflation slips back into single digits, raising hopes that the quickest series of interest rate increases in 3 decades is coming to an end. We've seen more than half of the economists in a Bloomberg News survey thinking that the BOE will refrain from raising its key rate again. This has already been priced into markets, it must be said. Figures this week are expected to show inflation dipping below 10%. I'm not sure it's a celebratory dance at that point for the first time since August, and a cooling into the red in the red hot labour market. After raising rates sharply from near zero at the end of 2021, BOE Governor Andrew Bailey has recently signalled that a pivot away from tightening is in store. Barclays are amongst the latest of the banks, the world's largest banks, to cut more than 100 roles in its investment banking decision. It's the second round of layoffs for Barclays, in fact, in less than 6 months. The jobs being eliminated aren't confined to a single country or function within the business. In Japan, Prime Minister Fumio Kishida's political fortunes had been improving of late. This weekend's assassination attempt may change that, depending on the motivation of his bomb-yielding attacker. A surprise visit last month to Ukraine, along with a landmark deal to improve ties with South Korea, led to a jump in Kishida's popularity. Buoyed by a strong result in local elections early this month, speculation had been abuzz in Tokyo that the 65-year-old may soon call an early national election. In America's richest enclaves, word spread quickly. A bank was offering loans on sweet terms. Wealthy home buyers and property investors with high incomes and sterling credit scores could get a mortgage from First Republic Bank with a rock bottom rate for several years. Better yet, they didn't have to start repaying the principal for a decade. Across Manhattan, San Francisco Bay Area and Southern California, those terms attracted legions of wealthy clients, including executives from other banks, as interest rates sank during the pandemic. The loans left borrowers with more cash to invest and spend than if they had financed their properties with more conventional mortgages. Demand was so strong that it helped First Republic double its assets in 4 years while deposits surged. Now, it's all looking like a colossal mistake. Coming up, markets. European shares are headed for a relatively muted start. Of course, potential for economic downturn, further rate hikes is on the top of the agenda for traders still. ECB President Lagarde is speaking today at the Council on Foreign Relations in New York. BOE Deputy Governor John Cunliffe is also delivering some remarks at a separate event. In UK, the Prime Minister Rishi Sunak is giving a speech on how an anti-maths mindset is holding back the British economy. I'm interested to see how that goes down with the general public. Expected data include Italy's CPI and Denmark's PPI. Let's have a look then at markets. Like I said, European equities very, very quiet ahead of the open. Really strong week, last week for the FTSE, for the DAX, climbing, the DAX above its current yearly highs to secure a close above them. The FTSE back above 78.45 and now fully faded the banking crisis. We're literally back to where we were, so well done on whoever bought the dip. Especially down at those sort of 7,300, that 7,300 level, which I had was quite a big one at the time. The cable is 124.12 as we head into our Monday. We've got Friday's down, pretty strong down bar to contend with, and where does that lead us? Because it basically faded all the gains from the previous 3 days to leave us pretty much flat on the week for the cable. We are just edging higher very slightly as we head into a busy week for UK in terms of data releases. The euro as well has been on the climb, but like the pound wasn't. That Friday gave back quite a lot of gains, and we weren't able to basically secure a close above new yearly highs, which was at 110.30 area. A lot of flow out of the US dollar though, still with signs that inflation is cooling, and the readings last week coming in below expectations. So again, um, we await more data this week. That's all that really can be said with where markets are moving at the moment. We know that the Fed is still data dependent. We know that there's signs of cooling inflation in the US, but also forecasts of a mild recession. So it's just suggesting that the Fed are going to have to really take the foot off the hiking pedal now. And again, we just had some Fed speakers last week who I can't remember which one it was, but basically saying some dovish remarks. So flow out of the US dollar was the main trade last week. It must be said. Not too much else for me to add from my end for now. I'll speak to you all inside the chat room. Until next time, I wish you all the best with your trading. Take care and bye for now.